Everyone ready? Camera's going. Action. Hallo und herzlich willkommen bei Aktien mit Kopf, finanzielle Freiheit durch logisches und langfristiges Denken. Mein Name ist immer noch Kolja Barkon und heute siehst du das erste von insgesamt 4 P2P-Interviews hier live auf dem Aktien mit Kopf-Kanal und exklusiv. Und zwar mit den CEOs direkt oder höheren Angestellten der Unternehmen. Und heute starten wir direkt mit Bondora, einem der größten P2P-Anbieter, in die ich auch selbst mittlerweile über 10.000 investiert habe. Und es ist meiner Meinung nach ein sehr spannendes und kontroverses Gespräch hier mit Pärtel Tomberg, dem CEO und Gründer von Bondora, entstanden, der das Unternehmen mit 19 Jahren damals selbst gegründet hat. Und natürlich habe ich für euch extra mir die Mühe gemacht und das ganze Interview auf Deutsch übersetzt. Ihr könnt auch die Timestamps zu den jeweiligen Fragen, die gestellt wurden, hier unter dem Video in der Videobeschreibung anklicken, falls ihr euch nur für bestimmte Themen interessiert. Also viel Spaß, bis gleich. Okay, wir sind jetzt zusammen mit Pärtel von Bondora und keinem geringeren als dem CEO von Bondora und Mitgründer. Und er wird uns jetzt einige Fragen zum Thema P2P und natürlich insbesondere auch zum Thema Bondora beantworten, aber natürlich wieder auf Englisch. Lars ist auch wieder mit dabei und der startet jetzt auch gleich mit der ersten Frage.
So, Pärtel, what do you think? Why go the people not to the bank and to Bondora to get a loan?
We're faster than a bank, we're typically cheaper than a bank, and we're also much easier to use than a bank, both for getting a new loan as well as managing your existing loans. So all our borrowers can get immediately on all their devices up-to-date overviews, how they're doing, what is the repayment. They get up-to-date notifications of the payments coming in. So overall, it's the whole experience, both in terms of speed, the price and safety, we think is much more better than the banks have on offer today.
Okay. But isn't like getting a credit at the bank less interest for me than if I get it at a P2P platform like Bondora?
No, it isn't. No, it isn't. So in both Estonia and Finland, our prices are cheaper than the bank's starting prices. Mm-hmm. In Spain, we're not yet there. In Spain, our pricing is not yet very competitive with the mainstream banks, mm-hmm. but we intend to get there this year as well.
Can you give us like an example in Spain? What are the normal rates and what are your Bondora rates right now and what is your goal?
So the starting rates in Spain for Bondora, I think, are 23-25% interest rates, mm-hmm. for the lowest sort of risk we currently underwrite. Mm-hmm. However, in order to be competitive, we need to get it the lowest rates around 10-12% to be competitive. Okay. In Estonia, the interest rates start, and in Finland they start at around 7-8%, mm-hmm. for the lowest risk customers. Okay.
Okay. How do you evaluate your loans?
So we use hundreds of data points. So we collect data from the credit bureaus, we collect data from the bank account statements, we collect data from the population registry, we collect data that the customer provides us, and we collect data on, what devices the customer use, how they use the website. So we combine hundreds of these data points and we run a risk assessment. And we run the risk assessment on what is the likelihood of the customer defaulting, what is the likelihood of the customer repaying the loan if they default. So, and we combine that then into a risk rating and interest rate. So each, similarly to you getting a car insurance, so people are very used to sort of getting different prices for the car insurance. Mm-hmm. And this logic is on Bondora as well, meaning that every single borrower gets a slightly different interest rate using exactly the parameters we have collected on the customer. Over the sort of either with this loan application or with the previous ones. So if they're a returning customer, we've also been tracking, how they make the repayments, and we use that information in calculating the interest rate.
Okay. Can small follow-up question? Can one specific borrower have more than one credit at Bondora, or?
Yes.
Okay.
And those credits can be at different interest rates. Mm-hmm. So let's assume you're a new customer, we have less information on you, then you start out at a higher interest rate, and once you make your repayments over time and we get more comfortable, we collect more data, then the interest rate comes down and you might get a new credit line or a new sort of product. And we never refinance the existing sort of credit lines, and this is in order to protect the investors. Otherwise the investors would finance the initial credit, and then if we would refinance those loans later on, then they've taken all the risk, but they won't be sort of as part of the creditors anymore. So therefore customers can have multiple credits over time. So in Estonia we've been operating since 2009. So over this 9 years on the market, we've had customers repeat and repeat and repeat. And the repeat ratios are really, really high for us. So typically when customers choose us over the competitors, then they tend to stay using a Bondora loan comparing going to an alternative, because they'll get an offer from Bondora faster and cheaper than they will get from their home bank.
Okay, so yeah, I also learned now that next year you already have your 10-year existence, and what's your broader vision for the future?
We already have our 10-year existence. We've been on the market for 9 years, but the company was founded in February 2018, so 10 years ago, and the whole concept was created in end of 2007. So we've been in existence. I've been doing that and only that more or less for over 10 years by now.
How old were you when you started?
20.
20, okay.
Yeah.
So right after school or study? And
I was still, it's a, I think compared to other platforms, we're the only sort of dorm room startup in the market. So I was studying in UK second year whilst I created the company.
And you saw English P2P platform, or how did you get the idea?
It would be great to say that it was my own epiphany, but frankly speaking, yeah, it was at that moment there was a massive credit crisis. So there was a massive beta lending boom in Estonia. There was a massive credit crisis, so banks weren't lending. There were only beta lenders, and SOPA had in UK just introduced the whole concept. So that was what we wanted to introduce, because we saw that as a much more efficient way how to actually provide personal loans and compete with banks without needing to build up the deposit infrastructure.
Good. Can you tell us a little bit more about your default process?
Default process, so our expected net defaults on Bondora are 12.5%. That's net of recoveries. Our expected average sort of gross default before recoveries is 23%, and recoveries are expected recoveries at 46%. But for an investor, that's sort of blended average if you buy everything. If you buy the lower risk stuff, then there the net defaults are expected to be around 3-4%, and if you only buy our sort of higher risk stuff, then there net defaults are at around 28-30%. But in all cases, the loans are risk priced, so the defaults are already priced into the interest rate of the loan. So from a financial standpoint, you can be risk agnostic, but many investors emotionally don't like someone not paying them back, although it's already priced into the loan. After the loan defaults, then we run in essence, very traditional process. So we take everyone to court. In Estonia and Finland, we can do it already automatically, meaning that on the day of the default, we file automatically the case to the local court. And in Spain, we're currently working on this process. And thereafter, the court, takes certain months to make a decision. And after we receive the decision, the bank accounts of the borrower will be frozen, and we will be receiving cash flows from the bailiff or the courts, not the borrower directly anymore.
Okay. How long is the whole process?
In Estonia, we filed all our cases that we had collected in December, and already by now 1/3 of the cases are back with us that we're currently processing to give to the bailiffs. In Finland it takes 4 or 5 months, But in Spain, we don't yet have that much experience. But if we look at, we did a similar thing, similar process in 2014, and there, the timelines were that it took around 4 to 6 months to get through the courts, and thereafter it gets to the bailiff. The recovery process after it gets to the bailiff can be, it can take years, but they return the cash flows and they will return both the principal and interest in that case. We're receiving cash flows today even for cases that defaulted in 2009. So that's why we don't actually sell off the loans anywhere, because we know from the data that, recoveries work long term and they can have a massive boost eventually to the returns. Because if you look at the loans we did in 2010 and 2011, then initially the net returns in Estonia were -10, -20%. By now, because of the whole process, they're at 30% net returns. So, that's crucial to really manage the portfolio, especially if there's a downturn.
For investors who invest in P2P, there's apart from the credit risk from the borrower, there's also always like this platform risk. So is it true that, or is it the case that at Bondora you are already being profitable, or are you like focusing more on growth, and what are your statistics on that?
We became monthly profitable in end of 2016, so first monthly profits, and 2017 full DAX year is profitable. More than €250,000. So financially we're stable. We have a very, very strong equity cushion, and we are profitable cash flow wise already today. However, we're still growing our revenues around 70% per year for the past few years. So I don't think it's, growth and profit can be at the same time. Our goal is not to be massively profitable or make a profit today, because in order to really, really compete with the banks, we need to still invest a lot into the technology and building up the infrastructure. But we understand that both from the regulators as well as our investor base, there's a massive public demand for us to be profitable. And I think it's, in our industry, you can't really get away with this sort of, let's, grow and burn kind of attitude, because people are coming to invest here their savings and the money they invest for the next 5 years. Because a lot of our customers, most of our customers, see their investments on Bondora longer than 5 years. There's very, very few customers we have who are sort of time constrained, that invest into 1 year, 2 year loans. Most investors are agnostic of the duration of the loan. They see that as a long-term investment, similarly to real estate investments.
Okay. It's a little bit different to the other platforms, especially the short-term loans. Yeah. Okay. A lot of investors told me that they lose the overview because of the €1 investments. Is it planned to implement minimum in auto invest?
We have a new sort of tool coming out soon that allows investors to give feedback on what features they want, and allows other investors to vote on which features we're going to implement. So if there's a lot of demand for that feature, then it surely will go up in the ranking.
Okay.
So we're trying to sort of have a much broader tool of community tools coming out this year that allows the investors to really be part of building Bondora further.
That sounds nice. Yeah.
So the classical question is like always, especially in our German folks, and it's that if you see a really high investment rate of return, you think, okay, this looks like a Ponzi scheme or like some sort of scam. And I was wondering, how do you refute these arguments, and do you get these arguments still now after like 9 years of being in the market, and how do you answer to them?
I think everyone gets them. You could still say that stock markets are a Ponzi scheme, but in our case, we've been on the market for 10 years. We are regulated. All the transactions we've ever made are public and you can validate. And thirdly, we're audited by PricewaterhouseCoopers and we're audited by KPMG. So isn't any additional layer of trust that is possible in the market. We've done everything that any solid financial institution can do in order to show to our customers and show to the public that it's a real business. And there's a real office around, and there are actual people doing day-to-day work, and there are regulators and auditors and third parties verifying that this is not some kind of a scam.
What I actually did in the beginning is I said, okay, the Bondora Spanish website, for example, you are the loan originator, right? So I just go to Google and check out, is there Bondora ES, and then I see if there's a website where I can get a loan if I'm a Spanish. So like just a normal thing where you can find out. And what I also think in a Ponzi scheme, people always tend to market the whole system of like, if you get all of the other investors, then we can build a huge fortune and everything like that. So I always look on the advertising also to figure out. But up to now, I didn't see anything. What about you?
No, I think so. Yeah. I think we are here in the office, so
it's also good to know for the German investors. That's part of why we did this trip, is to show there's actually people around an office, because on the internet there are people always skeptical, of course, and in part it's a good reason to be here.
Some people think it's only a post box or something else.
Yeah. Okay. Back to your question?
Yes. What do you think about the buyback guarantee?
Not positive.
Why not?
I don't want to evaluate other people's businesses, but it's if you want a guaranteed return, then guaranteed returns guaranteed by the ECB currently pay out maximum 3%. Anything guaranteed above 3% does not make a lot of financial sense to me, because there must be something that doesn't really make this into a guarantee. It's maybe a promise, but I don't think that buyback guarantees have a lot of backing. It's impossible that companies with very few euros on their balance sheet have guaranteed tens and tens of millions of lending. But I think once again, this is something that each investor needs to sort of understand, that there are very, very few guarantees when you invest. You can, ECB is pretty solid if they provide a guarantee to the banks. But even, we remember maybe 2009, even during 2009, bank guarantees backed by central banks were all under stress. And the European regulator had to step in, and they even had to print a lot of money to actually make those guarantees a success. And now if you take a bunch of smaller companies providing guarantees, then it's fine. If everything works, it works. If it doesn't, then it collapses all at once. And that is a danger. So I think people, when they're investing in peer-to-peer lending, shouldn't think about any guarantees. It's an investment. There's a return, and you get the return because you're taking risk. If you want no risk return, then U.S. Treasuries you may invest in, but there
don't expect return.
But dollar goes up and down, or you can put into sort of a bank deposit. So these are things if you want to have a buyback guarantee. All other guarantees are simply promises, and you shouldn't really compare different platforms because of that. Because if you're a short-term investor, and many of those platforms promoting buyback guarantees are super short-term investing, then it might make sense, because the likelihood of default and cascading defaults by the originators can happen in longer term. But if you're a longer term investor, then you shouldn't really assume there's any guarantees. Even if you're lending and the property is guaranteeing it, then in terms of downturn, Estonian properties, they lost 50% in their value. And 50% in real estate is pretty big amounts. So, it's every investment comes with risk. The easiest way to get over these risks is to diversify into multiple streams. You don't even have to diversify in the asset class, but diversify into multiple investments. If some things don't work out well, there's others to compensate, and that's what you should really, really be concerned of, like the credit risks of your portfolio, not the credit risk of an individual loan. Yeah. Because if you come to Bondora and only invest into one AA loan, then your portfolio is super risky compared to someone who comes to Bondora and buys 1,000 high risk loans. Their portfolio is not super risky. Their portfolio composed of 1,000 loans is, you understand how they're going to perform. But a single loan, can go anywhere. So I think that's really, really what, I hope your viewers get across, is that individual investment, regardless of what backing and guarantees they have, is risky. You need to diversify into multiple loans, and then you'll have a portfolio, and you should evaluate your portfolio.
So in your opinion, it's more a marketing promotion from the other platforms with a buyback guarantee?
Anything is a marketing promotion, yeah. I haven't seen buyback guarantees work really on scale, right? So RateSetter and SOPA, they don't have buyback guarantees. They have a similar mechanism that sort of allows investors to get a stable return, but that's not a buyback guarantee. SOPA never says that we're going to vouch for it, because they don't have the balance sheet to do that. I could say that I'm guaranteeing whole of Greek debt, and Greece can go to their investors and say, lend us 1 billion, Pärtel is guaranteeing it. Fine, right? If anyone buys it. But unfortunately, I don't have the money to back up Greek debt. And when actually that happens, it's going to be difficult. So I think that's really, really crucial that people understand. It doesn't mean that the platforms promoting it are good or bad. I think it's just sort of, there's a lot of platforms competing with each other who need to show that because the competitors are doing it. But I think people should sort of look past the buyback guarantee and look into the underlying stuff that they're actually buying.
And also that the buyback guarantee is from the loan originator and not from the platform itself. So if the platform has external loan originators and they clearly state that they themselves as a platform don't take the risk of the buyback. Yeah. So, and people just have to know, that like for example Eurocent or other loan originators, of course, they can also go bust, and then of course the buyback guarantee is not a buyback guarantee anymore. So,
sure.
Okay, so let's come to another topic that's always really, really important, and it's like all of the ethical criteria. For example, on consumer loans, do you have ethical standards that are important to you and your business? For example, if a borrower is sometimes denied a loan because he is already helplessly over indebted or has really high interest rates, or do you just say, okay, it's supply and demand?
In the countries where we operate, consumer lending is super regulated. We are regulated by the same entity that regulates banks, that checks our underwriting process, our interest rate, our loan terms, how we inform the consumers, and how we do risk collection. So outside of these parameters, we always make sure that the customers can actually afford to repay the loans, and if they cannot repay the loans, we either offer them a smaller amount, or we reject overall. But consumer lending is the most regulated sort of consumer product today in Europe, and we've seen massive amounts of regulation come in to protect consumers from typically themselves, and that is simply, there was a huge boom of consumer loans, especially payday loans, initially in Scandinavia and then in Baltics, and then sort of other parts of Eastern Europe. also in UK, which drove the regulators to massively sort of put different restrictions on the market. So I think today, you know, the government regulation is very, very, very solid, and make sure that even, you know, any startup operating in a business within Europe follows the same sort of responsible lending policies.
From a Spanish consumer, what is the maximum he have to pay if we get an interest from maybe 40% for the Spanish loans?
What do you mean?
From the other side, what have the consumer to pay?
The maximum interest rate a Spanish consumer has to pay.
We have capped the maximum interest rate in Spain at 80%. 80%. If you look at the competition on the market, and many of the loans, you know, B2B investors are actually investing into through other originator marketplaces, then in Spain you would typically see interest rates of, you know, 1,000%, etc. But that's a not super representative fact, because outside of the interest rate, it comes down to the amount, which plays a huge factor on also how you do the underwriting and collection, and what rights to, and the time of the loan. Yeah. So, you know, frankly, if, you know, anyone traveling in Europe in a hotel, then if you would put, you know, the cost of this one room and you would escalate this on an annual basis, you would see that you're basically buying a house. But, you know, that is what consumer lending has. But we have capped it at 80% in Spain, which is still considerably lower than the rest of the market. However, our overall goal in Spain is to bring down the sort of the interest rates to be competitive with the banks. We saw the same dynamics elsewhere as well, because initially when we launched in Estonia and Spain, the interest rates were higher, we weren't competitive with the banks, and step by step we've, you know, taking the market from the different players until we're really, really competitive with the banks.
It's very scary for a German investor to hear that they have to pay 80% and you earn as an investor 40%. So that's only a statement.
But I think it's very scary for most German investors to know that they're paying 18% on their credit cards. So you know that is actually the situation in the market, because people hardly realize what they're paying on their credit cards, you know, in short term. And credit cards are equivalent of consumer loans. There's effectively no difference between a credit card and a consumer loan. And the same German investors who initially, when they started, I think Bondora's done a lot of education, because we were the first ones to open up cross-border, and then German investors came and said, oh, you know, someone's paying 20%, and then understood that actually banks in Estonia are charging 30% on average. And then, of course, many people understood that actually their own, you know, paying to German banks with credit cards, you know, 18-20% interest rates.
And they maybe don't realize, because they just have like a couple of debt 1 month, and then
back in 30 days, or 60
exactly
days, it doesn't
then you pay like 15 euros, and then you think, oh, okay, it's not that bad, and then but you didn't calculate the interest. One thing that's always a little bit complicated in my experience for a lot of people, also for myself, is how exactly the return of the investor is calculated. The return of Bondora. Can you like give us probably not a simple, but like some type of thing that is incorporated into the rate of return?
So the rate of return is calculated pretty straightforward. So we take the amount of money the investor has already earned and subtract anything that is overdue from that portfolio. Everything that is overdue. So
it doesn't matter how long overdue? No.
So, but in order to make this comparable, if we calculate in 6 months of income, we take in 6 months of losses. So they're comparable, you know, one-on-one. And the same methodology we've used since beginning of 2011, I think. Okay. And you can see from our website, especially the monthly portfolio performance overviews, which are now in German, you can see how the return has developed over the years. typically, when a new, let's say, portfolio is issued, initially interest rate goes up, then defaults kick in, it starts declining, and eventually recoveries kick in and it goes up again. So there's a sort of a certain U-curve in the portfolios, which we're trying to now educate our investors on the website to show them where we're expecting the portfolio net return to be in. Because we've had this before many times, that people initially come and see 20% net returns before defaults come in. And then, it goes down and they get scared. Although upfront we've actually said that the expected return is at 12%. And this is something that we've, over the past, I think 6 months worked hard, and I don't know that we have that many sort of questions coming in around that topic anymore. But before that, we had a lot of this sort of, people got super excited initially before there were any defaults, and then when defaults came in, they reversed sort of, from massive optimism to massive pessimism, and then eventually they saw this sort of stable out and sort of reach actually the levels that we've been forecasting and how we've been pricing the loans.
So, and basically, the longer you invest, then those waves tend to even out if you invest at different points of time.
Yes, and I think as a new investor, as an existing investor, you should really rather look at the expected return range than the current level of return. But there's a because Bondora today is a long-term investment. If you're doing like 1-2 year investing, then it's possible on Bondora, but it's not really the product for you today. We are soon releasing a new product that is also suitable for people investing in shorter duration.
Yeah.
But our current product today is really intended for longer term investing. And it's not for sort of, in and out. It's not a trading platform. Although many people use it as trading, but these are super sophisticated investors who are trading, algorithmically.
On the secondary market then?
Typically on the secondary market,
Okay. Lars?
Yeah. In your opinion, what's the maximum you could recommend from all assets to invest in peer-to-peer loans?
Peer-to-peer lending, or this marketplace lending, is such a very, I think it's more of a process than an asset class. So you can't compare Bondora really with a property lender. We're not even in the same asset class. Even within Bondora, there's so many different types of countries, risks, duration, that you can achieve diversification even within one platform. So if you look at the whole universe, then I think it's more a sort of way of thinking that you can yourself decide where you put your money. You can understand where you put your money, hopefully, and you can control where your money goes and you keep track of it. So, and either you now invest in 10 platforms, or within platforms you invest in thousands of originators, or in one platform you issue or invest in thousands of loans, then you can reach diversification in many, many different ways. But so, frankly said, with looking at the total peer-to-peer lending universe, you don't have to move outside of it. Because in most cases, you're investing in the real economy. If you invest on the sort of more traditional assets, then almost never you invest in the real economy. Because on the stock market, you're already typically investing in secondary trading. The money does not go, unless you invest in IPOs, the money does not go to the real economy. If you put the money in deposits, then in back of the day, it went to the real economy, but today banks are not really lending, so it stays on the balance sheet of something. So I think peer-to-peer lending is more of a do-it-yourself investing and investing in the real economy. And now you can choose just where you invest, and you can I don't think there's any limits that you should actually put your money into traditional assets, because the traditional assets are financial instruments that don't give you access to the real economy. So the money does not go to the real economy.
Okay, well, in my opinion, is in the long term. Of course, in the stock market, you invest in the secondary market, but of course, it correlates over the long term that the real earnings of the business tend to reflect then in the long term on the prices of the assets in the market. But it's just opinion. Back to my last question for you is what investments do you make yourself apart from P2P, and of course do you invest also in your own platform in the P2P loans?
All my assets are with Bondora, both in terms of the money I put into the company as well as the money I put into the loan portfolios, as well as my family.
All in.
It's all in, yeah. It's all in. I don't.
Okay.
I don't want to put money into something I don't understand.
Mm-hmm.
You know, I don't understand why stocks go up and go down the next day.
Okay.
And no one understands. They make different formulas and they talk and they have loads of shows, but no one really understands. How can like a index and bunch of companies overnight lose 10% of their value? I mean, it doesn't make any sense. So, you know, I'm a proponent of investing, and you should diversify and you should put money into the real economy. But, you know, I want to stick with some things that I know.
Okay.
And all the things that I've made losses on are things that I don't understand, and all the things that I've earned a return on are related to loans or bonds.
Mm-hmm.
So that is something that I'm clear and understand. When it comes to everything else, then it's too vague.
Mm-hmm.
I or an individual cannot be directly in control of the return. You know, you cannot be really in control of you know, how stocks go up and down, etc. So it's too complex. So, you know, I want to stick with the basics. And today the best investment is Bondora, both in terms of equity as well as the loans.
Yeah, that's a really nice controversial statement. It's going to be a lot of discussions under the video, but I like that statement.
Yeah.
What do you say?
My last question is, do you have any problems with the loan supply? Because some platforms face problem every time.
I don't think we're pretty balanced in that terms that we've created a system that, you know, invests in loan marketing as soon as there's excess demand, but we don't fiddle around with our underwriting processes or underwriting quality because of, you know, the supply and demand. When there is excess supply of investors, then we invest more into marketing, and that's very, you know, this is something we can do because we're doing consumer lending. It's a, you know, marketing driven business. If you do mortgage lending or business lending, it's more difficult because it's not, you know, a consumer marketing driven business. But in our case, we see that if there's excess supply of investors, we invest more into marketing.
Can you finally tell us a little bit more about your new project, what you want to launch in the next months?
It's an invitation-only project initially, but that will solve many of the fundamental issues people have about investing in peer-to-peer lending. It solves liquidity, it solves unfair tax treatment, and it solves sort of volatility of the returns. But outside of that, I'm not gonna be able to share anything yet.
That sounds interesting. Okay, then thank you very much for the nice interview.
Thank you.
Das war Pärtel Tomberg mit mir zusammen aus Tallinn. Vielen Dank nochmal für die Einladung. Es war auf jeden Fall spannend, dort mit den Leuten zu sprechen. Und ich hoffe, du hast jetzt einen etwas besseren Übersicht oder beziehungsweise besseren Einblick in das Unternehmen bekommen können. Natürlich muss man immer am Ende des Tages selbst recherchieren und schauen, ob das Thema P2P-Investment für einen selbst etwas ist. Ich finde es vor allem deswegen geeignet, wenn man sich in immer steigenderen und immer weiter nach oben kletternden Bullenmärkten nach Aktien Ausschau hält und immer weniger findet, dass man dann auch zum Beispiel P2P für sich selbst mal in Betracht ziehen kann. Natürlich nicht mit einer großen Menge an Geld erstmal, sondern man sollte sich in so ein Investment meiner Meinung nach langsam rantasten. Genau das bieten ja diese P2P-Plattformen ja auch an. Und ich persönlich, ich habe so ungefähr vielleicht 5 bis 6% meiner Investments mittlerweile so in P2P, werde aber das Ganze noch so ein bisschen aufstocken. Also, bis zum nächsten Mal, rationale Grüße, ciao, ciao.